The more things change, the more they stay the same. Heading into a very similar summer here in San Diego real estate.
Similar San Diego summer. All right, let's take a look at what's happened over the past few weeks, and then we'll zoom out to look at long-term trends. So let's take a look at what happened between March and April.
Okay, looking at March to April of this year, we have a 3.7% increase in new listings, pending sales up 1.3%, closed sales up 9.6%, days on market actually down a little bit, 7.5%, median price up 1.1%, dragged up by attached housing.
Yeah, detached homes stayed flat, but attached home prices went up a little bit, so that bumped up our median price a bit.
That's somewhat unusual. Usually it's over the recent past, the attached have been sort of more depressed, but
not this month.
Yep, not this month. And then the number of homes for sale up 10.4%. So, you know, when I say a similar summer, I mean similar to last summer, the summer before that, and the summer before that. Did I go all the way back to 2023? Because it's 23, 24, 25, now 26, all very similar pattern, which we'll take a look at in a minute.
Yeah, don't take our word for it. Let's look at some charts.
Let's look at it.
All right, so we've got some long charts here going back to 2014, and you can see we weren't lying. You can tell what happens.
Yeah.
Yeah, heading into summertime.
Right. I mean, if you look at 2023, 24, and 25, you can see, I mean, the shape is the same. There's a little more activity in 24 and a little more in 25, and it looks like we're heading for maybe a busier summer volume-wise, although the pattern seems to be remaining the same, at least up to now. Really, though, the last 3 summers are unusual in their low volume relative to the ones going back to 2014. In fact, 2023 was the lowest volume year in like 30 years. So that's what's going on volume-wise. Last April was the highest in 3 years. But the difference between, you know, 1886 and 2340 and 1994, it's all really sort of low volume. And then the same thing with attached housing and the same thing with closings. And, you know, this really kind of keeps things a little bit economically depressed when we have such low real estate volume. Although it seems like we might just need to adjust to that going forward, because until interest rates really change a whole bunch, it seems like maybe this is going to be the norm.
Or if prices went down, that could change things too.
That could change things too.
But that doesn't seem to be happening yet, because
No.
Let's take a look at median prices.
Right. So median price, very flat for detached housing for the last 3 years, at least in April and across all months, really. But this past April, last month, 1.1 million was the median for detached, 680 for condos. And again, look how flat those are. So, I mean, the upward trend in median price has really flattened over the last couple of years. And, you know, we see a lot of ups and downs. However, overall, very, very flat.
Yeah, if you bought back in 2015, you're looking pretty good.
Right. Yeah, but if you bought here in 2023, 24, 25, and you're, you know, tight on equity, it's going to be tight when you try and sell, which is adding to the lack of sellers, which is adding to the lack of volume, which is, you know, sort of just part of the whole issue right now.
All right, well, let's look at something else.
Yeah,
let's look at inventory of homes for sale.
Okay, cool. Yeah, inventory of homes for sale. Again, last April was big. This past April, not as big. So I have been saying that we're seeing the same pattern, although fairly stark difference between these 2 Aprils for detached homes. Now look at attached, exactly the same number of attached pretty much last April to this April, after a big jump from 24. Then, of course, looking at the inventory of homes for sale going back to 2014, or yeah, right here in 2014, we peaked out at about 9,500. That was the last most highest number that we've seen. And then, you know, it's been up and down, although, you know, last summer here we peaked out around 7,000. We'll see where we get to this year. If we stick around 7,000, you know, you'll see some softening, but without any other economic calamity, prices are going to kind of stay the same.
Well, should we talk about interest rates, or should we just skip over that this month?
Well, let's just talk about it.
All right.
Why not?
We'll go ahead. So here's the most recent Freddie Mac primary mortgage market survey talking about what's happened over the past week.
Yeah, so 6.36 over the last 7 days, and that's down from 6.37 the week before, and then after climbing for the previous 2 weeks, and of course the brilliant low spot for 2026 was back in February when we were at 5.98 for a couple of days. And so, as long as rates it seems like things were just about to take off when they were dropping below 6. And most experts say, if we stay below 6 for very long, you're going to see more buyers, you're going to see more sellers. So as long as we're hovering up here, I mean, people are definitely still buying and people are definitely still selling. It's just the volume is lower and more people are staying in their homes waiting for these rates to come down so they can buy that replacement property at a lower rate.
Well, mortgage rates are closely tied to 10-year treasuries,
Absolutely.
which are affected by a lot of factors, but inflation is one of the biggest factors that affects the 10-year treasuries. We just had a consumer price index report come out this week, and it was pretty hot. I think it was one of the hottest ones for 3 years.
Yeah.
Inflation goes up, 10-year treasuries go up, mortgage rates go up. So
yeah,
that's kind of moving in the wrong direction there.
Right. Everybody's really focused on what's happening with the Fed, but the Fed is only a very small part of what happens with mortgage rates.
Yeah, the federal funds rate affects mortgage rates, but really it's those 10-year treasuries that we're looking at more than anything.
Yeah. And inflation is bad for all of it.
Yes. And the inflation continues to heat up. Yeah, so we'll see what happens next. But right now, here we are.
Here we are, and heading into the summer. If you have any questions about buying or selling in San Diego County, send us a message, give us a call. And if you want to know what your home is worth, just grab me right off of YouTube and get me into your living room, and I'll talk to you about what's going on with your specific property.
And if you like this video, please share, subscribe, comment, tell all your friends. We'll be back next month.
Yep. Next month with another month-over-month update,
yes.
And next week with more great real estate information for you. And then, of course, Friday nights are always fun with TGIF San Diego, that we sit around and talk about some cool stuff going on in San Diego. So
6 o'clock on Fridays if you just want to grab a beverage and hang out and chat. Yep.
6 o'clock Friday, every Friday, we're live for a little bit. So tune in for that. And until then, have a great day, and we'll see you back here.
Thanks for stopping by.